Way back in 1991, when the Indian economy opened up for global investors, it was touted as the land of opportunities, possibly because it was such an untapped market with so much potential. Fast forward to a little over 30 years from then, those words have been proven to be true. The Bombay Stock Exchange has risen from just 1,000 points then to having touched 60,000. India has received the most FDI and FII inflow than any other emerging country, and the country is not done yet. So not done, the investors of the country find it difficult not to be a part of the diversification and globalization theme going around and constantly look for opportunities outside to invest and have greater global exposure by being part owners of the most dynamic, high-performing, trend-setting companies in the world. It is common knowledge that most of the best companies are listed in the USA. One such index with huge potential for investors has proven out to be the Nasdaq 100 index. In 1985, the average component market cap was only about $580 million, compared with $53 billion today, which adds up to a 90-fold increase. The Nasdaq 100 index has more than $50 billion of investments in exchange-traded products, making it the most tracked index in the world. Let's talk about Nasdaq and the Nasdaq 100 Index. Nasdaq, which stands for National Association of Securities Dealers Automated Quotations Stock Market, was founded on February 8, 1971. It currently has 3,554 listings of companies, and its total market capitalization stands at $19.4 trillion as of 2021, only second to the NYSE. It is located in New York City, USA. The Nasdaq 100 is home to many category-defining companies that are at the forefront of innovation in their respective industries. The sales growth of the index components is among the highest in the industry. 7 components have averaged more than 50% sales growth over the last 3 years. With fully paid capital for long-term investing in derivatives, and the notional value of financial instruments that follow the index exceeds $1 trillion for the Nasdaq 100 index. The Nasdaq 100 index is known as a tech-heavy index with Apple, weightage in Nasdaq 100, 13.684%. Microsoft, weightage in Nasdaq 100, 10.439%. Alphabet, weightage in Nasdaq 100 to 7.194%. Amazon, weightage in Nasdaq 100 to 6.939%. Tesla, weightage in Nasdaq 100 to 4.085%. Meta, weightage in Nasdaq 100 to 2.693%. These 6 heavily technology development companies add up to 45.03% of the entire Nasdaq 100 composite. At its inception, the Nasdaq 100 was a pure market cap weighted index that changed in November 1998 to make it suitable for the basis of an exchange-traded fund. It now follows a modified cap-weighted method. Nasdaq Performance 2022. Nasdaq performance in 2022 has been dismal. On one hand, this might seem like bad news, but on the other hand, this is an opportunity for a lot of investors to enter Nasdaq. Nasdaq has historically outperformed the broader market due to its composition, which includes tech and growth companies. Higher returns come with higher volatility, and anyone investing in Nasdaq should brace for periods of fast rise and sudden crashes. How can Indians invest conveniently in the Nasdaq 100 index? In India, the easiest way to invest in a foreign fund or company is very tiresome, involving a lot of paperwork and an even more complex fee structure. The easiest way has always been through passive investing. That is from there that the entire concept of investing in the exchange-traded fund and fund of funds find most of its backing, and the Nasdaq 100 ETF as well as the Nasdaq 100 FOF is something that has definitely caught the eye. The Indian investor and bankers have paid due attention to it by launching such schemes in India for Indians who want a piece of the pie the best of the West is offering. An ETF or exchange-traded fund or index fund is a type of pooled investment security that operates much like a mutual fund. Typically, ETFs will track a particular index, sector, commodity, or other assets and can be bought and sold from the stock exchange the same way a normal stock can. Whereas a fund of fund is a mutual fund that invests in the units of other mutual funds, including but not limited to index funds and ETFs. The underlying funds may or not be managed by the same asset management companies which is managing the FOF. Some of the funds that are present in India are present as follows, along with some details about them. Kotak Nasdaq 100 Fund of Fund, Direct Plan Growth. RS, 1450.62 CR. Expense ratio, 0.27%. Inception date, the 2nd of February 2021. 98.45% allocation is in international mutual fund units, namely this year's Nasdaq 100 UCITS ETF USD. Rest is in TREPs. Returns in 1 year have been minus 20.52%. Aditya Birla Sun Life Nasdaq 100 FOF, Direct Plan Growth. RS, 96.76 CR. Expense ratio, 0.13%. Inception date, the 1st of November 2021. 98.1% allocation is in international mutual fund units, namely this year's Nasdaq 100 UCITS ETF USD. The rest is in Clearing Corporation of India Limited. Returns in 1 year have been minus 23.46%. Modal loss will Nasdaq 100 ETF, RS, 4,911.31 CR. Expense ratio, 0.57%. Inception date, the 29th of March 2011. 100% allocation is directed towards replicating the Nasdaq 100 index. Returns in 1 year have been minus 16.6%. Modal loss will Nasdaq 100 FOF, RS, 3087 CR. Expense ratio, 0.10%. Inception date, the 29th of November 2018. 99.5% allocation is in international mutual fund units. Rest is in TREPs. Returns in 1 year have been minus 19.69%. Navi Nasdaq 100 FOF, RS, 245.16 CR. Expense ratio, 0.13%. Inception date, the 23rd of March 2022. 102.81% of the total fund has been allocated to the Invesco Nasdaq 100 ETF. A negative or short position of 2.81% has been created toward TREPs. Returns since inception have been minus 19.16%. ICICI Prudential Nasdaq 100 Index Fund, Direct Plan Growth, RS, 304.04 CR. Expense ratios, 0.5%. Inception date, the 18th of October 2021. 99.02% of the funds have been allocated to foreign securities in the Nasdaq 100 composite in order to replicate the composite itself. Rest 1.08% is in TREPs. Returns since inception have been minus 21.00%. Now let's have a look at my portfolio.
Investing in Nasdaq 100 is pretty simple. You can use any of your platforms, the investment platforms, to invest in Nasdaq 100. You can invest through Zerodha, Upstocks, IND Money, even Crow. I use Crow to invest in Nasdaq 100. If you just type Nasdaq 100, you can see the list of fund houses which are offering the fund for Nasdaq 100. So I use a Navi Nasdaq 100 fund because the expense ratio is pretty low. So you can check the expense ratio of Nasdaq 100. Navi Nasdaq 100 fund is 0.13%, which is very good. So this is almost at par with some of the ETFs in the market. So you can just put in the amount you want. So the other way to invest in global brokerages like Stockle, here you can just type in so as you can see, the Nasdaq 100 is basically invest in the Invesco Nasdaq 100 ETF, which you can directly buy on Stockle, and you can see the details. You can just place your order. So if somebody already has a Stockle account or a vested account, they can directly buy here. Otherwise, you can also use your Indian platform depending on how much you want to invest. So as you can see, Nasdaq, the last 1 year has been brutal, especially because it has a lot of technology companies, and because of the fear of interest rate hikes, the tech companies have suffered a lot. I mean, it has almost gone down 50% from its all-time high, which is close to 16,000. So you can see most of its gain before to the COVID have already been erased. So Nasdaq is one index which will always be very volatile because it has tech companies which, when there is a bull market, they are the first one to go up. These are all growth stocks, but when there is a recession or things don't look hunky-dory, they can be very volatile. So it's an index which is meant for people who have a good risk appetite. But if in the long run it has paid off for most of the investors, it's outperformed the broader market. In fact, if somebody wants to invest in the US stock market from India, then if they don't want to just choose Nasdaq, they can choose the Navi Global US Total Stock Market Fund of Fund. So basically, this will have less volatility compared to Nasdaq, but obviously in the long run, returns might be slightly less than Nasdaq. So you can see it has ratios even lower, 8.06%. So this is very good. I mean, something what I like about Navi funds is the expense ratio is generally lower than other similar funds.
You can read the full blog on this topic by using the link provided in the description. That's it for this video. If you enjoyed it, then hit the subscribe button and turn on the notification for future video updates. Also, share your reviews in the comments section. See you in the next video. Till then, bye bye.